Okay. Shall we proceed? I know it's hard to sit for many hours and listen, but I can say each and every minute you spend here will definitely help you for a quick revision. Okay. For investment accounts, what I want to do is, I'll just summarize whatever adjustments we usually have, sir. I'll just summarize it and then quickly I'll show you one or two problems. Then we'll have a better understanding. Okay. Just let me show you. I thought once again we have to consume lot of time if I need to write here. So thereby I've just written it prior and I am showing it now. Please observe, sir, in investment accounts, usually we'll deal along with the standard also, sir. First we'll complete AS 13. Then we go to the normal chapter. But right now I am not covering standard portion, which is simple. Now I'm going to only normal chapter. In other words, where we prepare debentures account or any equity shares account. So first, let me move to debentures part. Hello, what is that? Debentures. Here, usually with respect to debentures, these are the 4 adjustments you will have, sir. What are the 4 adjustments you will have? One is purchase, one is sale, one is accrued interest, the other one is conversion. If you know these 4, any debentures question you can solve. Of course, one more is there, interest, not accrued interest, normal interest. But I don't want to insult you by discussing about computation of normal interest. Interest computation, Lily puts here. Accrued interest is a discussion. Okay, right. Now, let me start with purchase, sir. Now, purchase can be done on 2 ways, sir. Either on come interest or ex interest. Sir, please remember, both are the ways of quoting a debenture. When a seller quotes the price, either he may quote come interest or he may quote ex interest. But understand one thing, whatever is the scenario, he will collect interest from you, sir. Hello, whether it is come interest or ex interest, he will collect interest from you and you have to pay the interest also. It is just a way of quoting the price to avoid that brokerage, etc. But usually, whatever is the type, that is come interest or ex interest, interest receipt and payment is common. Okay, right. Purchase can be done on 2 bases, sir. One is come interest, the other one is ex interest. If it is on come interest, how do you find the cost? Very simple. Take the number of debentures, multiply with debenture price. As you are telling come interest, price also will be given come interest. You please multiply with that. Now, for that, you have to add what, sir? Brokerage. Please remember, brokerage will always be computed on transaction value. Which value? What is transaction value? This one only. Whether on come interest or ex interest, whatever is there, on that only we'll compute brokerage. We'll add brokerage. Now, because we are telling come interest, sir, interest payment should not be made part of the cost. It is an expense for us. Hello, interest if we pay, of course it is really not an expense also, because later on we are going to recover at the interest due date. At the time of interest due date, we will receive the interest amount which we have paid to the seller. So usually this is not a cost, that's why we will reduce, because price is inclusive of interest. So we will add brokerage, reduce the interest. Suppose if it is on ex interest basis, we'll simply add brokerage and there is no need to reduce any interest. Is that clear, sir? Now, sir, then shall we write that interest payment in our debenture account? We will not reduce interest here. In our debenture account, will we write interest payment, sir? Yes. That is what I am telling. Whether come interest basis or ex interest basis, interest receipt and payment is common. Maybe you will not reduce it here, that's all. Because it is already reduced with interest, you will not reduce it once again. That doesn't mean you will stop making payment. Payment has to be recorded. So hope it is clear. Another one. How to compute interest. Sometimes interest computation also will hit you, sir. Very simple, sir. I'll not explain big logics, but simple way to remember is from the last due date to the date of transaction. Over. Hello, what is that? Any question, any place, just apply that period over. So what is that? From the last due date, take the interest last due date, because till that time already you might have received. Last due date to the date of transaction. That is, whatever transaction date is, please consider this much only interest computation will be there. Is that clear, sir? This is what? Purchase. This is what? Purchase. Number of debentures into debenture price, add brokerage, reduce interest. If it is ex interest, only adding brokerage. Now let me come to sale transaction, sir. Now what we have discussed is purchase. Now let me move to sale. Sale also possible on two ways. If you are purchasing on two ways, sale also possible on two ways. Seller only no doing that. So thereby sale might happen on come interest basis or on ex interest basis. If it is on come interest basis, once again, first you will write number of debentures into debenture price. Now you should not add brokerage, sir. You should reduce brokerage, because when you are a seller, what stockbroker will do? He will give you the sale amount net of brokerage. He will give you the sale value of the securities net of brokerage. Hence first we need to reduce brokerage, then it is proper sale value, but in that interest is included. So reduce the interest. How to compute? Once again same, from the last due date to the date of transaction. If we reduce that, what we get is net sale value. Once we find the net sale value, we'll compare with the cost. How to compute cost, sir? It is either on FIFO or weighted average basis. But if nothing is mentioned in the question, we usually follow weighted average. That means if they say FIFO, FIFO. If they say weighted average, weighted average. If nothing is mentioned also, weighted average. So that is what we finding the cost. Then we'll compare with the net sale value. Difference will be recorded as profit or loss. Then if it is ex interest, once again same, number of debentures into the debenture price. From that we'll reduce brokerage. No need to reduce interest. That's all. Interest reduction alone will not be there. Brokerage will be computed on what? Once again same, sir. Always on the transaction price. If it is come interest transaction, on come interest value. If it is ex interest transaction or ex interest value, that's why I say transaction value. Which value? Transaction value. Either it may be ex interest transaction or come interest transaction. So hope everybody have understood. Now let me move to two important aspects which are usually committed as a mistake. These two are usually mistakes which will be regularly committed, sir. Please be careful. First one, accrued interest. Why we will do mistake in accrued interest? You know the concept, but you overlook it, sir. In the process of writing the solution, you will forget about that accrued interest. Another one is conversion. Sometimes debentures may be converted into equity shares. You write wrong answer here because you don't know the concept. Hello? Accrued interest, you know the concept, but in the process of writing the solution, we forget about that accrued interest. But conversion, you will write the mistake because you don't know the concept. Anyway, these two are usually committed as mistakes. So let us discuss quickly these two. One is accrued interest. What do you mean by accrued interest? Very simple. Sir, let us assume interest due dates are 30th June and 31st December. What are the interest due dates? 30th June and 31st December. Year ending is 31st March. What is the year ending, sir? 31st March. Year ending is 31st March. Now tell me one thing. What is the last date on which you have received interest? 31st December. Now you are closing books of accounts on 31st March. Now can I say I should receive this 3 months interest? No, because next due date is 30th June. Then when we should record that 3 months interest? Shall I go and record on 30th June or shall I record today itself? If I go and record on 30th June, you will say that I am following cash basis. Hello? Because when you will be receiving interest 30th June. So if I record on 30th June, that means I am following cash basis. I don't follow cash. I have to follow accrual. So thereby when I should record 31st March only, but not the receipt showing that it is receivable. That is called as interest accrued but not due. It is not due, sir. It will be due on 30th June, but it is what? Accrued. So that is called accrued interest or interest accrued but not due. So usually when it will happen, sir, just remember this statement, you will never go wrong. What is that? If interest due dates and year ending is matching, accrued interest will not be there. Let me take the example. Interest due dates are 30th September and 31st March. Year ending is also 31st March. Now tell me, last interest due date, what is that? 31st March. That means you have received interest till 31st March. You are closing also books of accounts on 31st March. Any receivable? No. So thereby accrued interest will not be there. When accrued interest will be there, sir? If interest due dates and year ending are not matching. Here you could observe interest due dates are 30th June and 31st December, whereas year ending is 31st March. Is it matching? interest due dates, are they matching with year end? No. In such a case, definitely for some period accrued interest will be there. How to compute, sir? Interest. Once again, same. Last due date to the date of transaction. Here you are closing the books of accounts, hence till the 31st March. Usually 3 months only. Usually for 3 months only you will book that accrued interest, because in all our questions interest due dates are given half yearly. Discussion clear? So this is what accrued interest, sir. Now let me proceed to another topic, conversion. The most important topic, sir. Usually mistake every time. Most of the, if out of 100 students, 80 students commit mistake with respect to this point, sir. What is the entry for conversion, sir? Sir, first of all, think carefully. You are an investor, a company? Investor. You are a investor. For you, debentures or equity shares are a asset. So debentures are getting converted into equity shares, means from you they are taking away debentures and they are giving equity shares. What you are receiving? Equity shares. So you will debit equity shares. What you are giving? Debentures. So you will credit debentures. So entry will be equity shares to debentures. Now the question is, what about profit or loss? Now look here carefully. Let us assume the cost of the debentures which are being converted is 1,20,000. How much, sir? They may give in the question like this. Instead of this 1,20,000, that means in conversion of this 1,20,000 worth the debentures, I will give you 10,000 equity shares of rupees 10 each. Like that they may communicate. Now can you tell me profit or loss for us? Sir, profit or loss for us? Is there profit or loss? Loss, because out of, sorry, for 1,20,000 worth debentures, today we are receiving only 1 lakh. So 20,000 is the loss. Now if you think in this way, that is completely wrong, sir. This is what the mistake committed by majority of the students. Tell me one thing. Suppose you are investor. Now what is the worth of your investments? 1,20,000. What I am telling, you give me 1,20,000, I will give you 1 lakh. Any investor will accept? Will any investor will accept? You are telling you will give 1,20,000, I will give 1 lakh. Any fool will accept? No fool will accept. Please understand, this is an exchange, sir. It's just like a barter. You are taking one, I am giving you one. You are giving me your debentures, I am giving you equity shares. It's just like a barter. In a barter, no party will have profit. Hello? They'll try to exchange for equal value. Sir, are you getting the point? Then you may get a doubt. So then why they have said you are receiving only 10,000 shares of 10 each? When they have given like that, 10 rupees might not be market value, that might be face value. Because we will never consider face value, we'll always consider market value. If at all they say for 1,20,000 worth debentures, they are giving 10,000 shares of 10 each, its market value might be 12 rupees each. Its market value might be 12 rupees. As a result, they are also giving you 1,20,000. In fact, companies will do something favorable to the shareholders, but they never do something loss, because no investor will accept. Sir, are you getting the point? Suppose if there is any student who say that, no sir, this 10 rupees is not market value, sorry, this is not face value, this is market value, then something else should be given in the question, that balance 20,000 is paid in cash. If they give like that, I accept that it is a market value, because equal settlement should happen, sir. If you feel that only 10,000 equity shares can be allotted, then for the balance 20,000 cash should be given. If they don't give like that, that means that 10 rupees is face value only. That is not market value. So I will tell you one thing. Please remember this point. What is this? Never any profit or loss arises on conversion, because it's a barter, sir, exchange. You are giving one thing, you are taking another thing. Who will accept any profit or loss, sir? Rarely, company might face some loss and give some profit to the investor, but never investor would accept any loss. So please don't think that 10 rupees will be of any face value. Sorry, will be any market value. That is only face value. So hope everybody have understood. Now, with this second point also complete. One last point, sir. Sir, suppose conversion is happening somewhere on 31st Jan. When it is happening, sir? 31st Jan. Now, interest due dates are 30th September and 31st March. That is the interest due dates. Now conversion is happening on 31st Jan. Now tell me, relating to these 4 months, because already interest paid on 30th September, relating to these 4 months, will you receive interest now or on the interest due date? Company will pay you interest now immediately on the date of conversion or on the interest due date. There is no rule. There is no rule as to what should be the pattern. Because obligation for the company is only on interest due dates, sir. That is why interest due dates are fixed. But usually what may happen is, now if today debentures are converted into equity shares, our procedure is on the interest due date, whatever debentures are there, for them we pay entire interest for the 6 months period. That is what our procedure, sir. We may forget about the debentures which are already converted. Please understand, our procedure is, we look at the closing debentures, for them we'll calculate interest and we'll pay them. We'll never look after those debentures which are converted, suddenly issued. All those things we'll forget, sir. We'll simply look at the closing balance. So when we look at the closing balance, possibility is there that you may forget those debentures which are already converted. That's why usually on the date of conversion only settlement also will happen. But nothing wrong if you settle on the balance sheet date also. But usually ICAI, we will, as per ICAI, we settle on the date of conversion. Discussion clear? That's all, sir. Not even one point will be extra with respect to debentures. All these points we apply in questions I have written here. Have you understood, sir? Now let me quickly apply into a question. The two convertible debentures question only. Sir, once again, I will not be doing any calculations, sir. I'll just simply show you the question and solution. That main points I'll just explain, that's all. Just wait, sir. Okay. Right. Sir, shall we start? Once this much discussion was done, this question I think will take only 5 to 10 minutes, sir. Quickly we can complete. Let me show you. A Private Limited follows the calendar year for accounting purposes. Many students don't look at that year properly, sir. Please look into the question carefully, whether it is calendar year or financial year. So what is the year? Calendar year. The company purchased 5,000 numbers of 13.5% convertible debentures of face value of 100 each of P Limited on 1st May 2018 at the rate of 105 on come interest basis. So this was the transaction, sir. So how we will record, sir? For the purchase, we'll write the working note. Now, usually how we record, sir? How many debentures are purchased? 5,000. Each at 105. 5,000 into 105. For that, look into the question, is there any brokerage? You should be careful, sir. Is there any brokerage or not? Nowhere they have given that brokerage is there. So thereby, if brokerage is there, we have to add brokerage. So then we have to reduce any interest because it is come interest. So 5,000 into 105 minus, so face value is 100. So thereby 5 lakhs into 13.5% into how many months, sir? The interest due dates they have given is 31st March and 30th September. What is the last interest due date? 31st March. So thereby for 1 month we will receive the interest. So that interest if we reduce, so interest amount is 5,625. If we reduce, we will get the value as 5,19,370. Is that clear, sir? So whatever interest we pay, we will write here. Cost portion we will write here. Sir, look into the question. Year ending and interest due dates, are they matching or not? Because accrued interest otherwise. Year ending and interest due dates, are they matching? Year ending is 31st December. Interest due dates are 31st March and 30th September. Matching, Accrued interest will be there or not? Yes. Sir, have we written accrued interest? For writing first there should be some opening balance, no? If you are having debentures in the last year, then interest will be receivable, sir. In this question, you are not having any opening balance. If you are having debentures in the last year, say that it is receivable. You have purchased only in the current year. How could you say there is any receivable? But be careful. That means at the year end, accrued interest will be there. Because year end, it may not be zero, no. Some debentures may be there, but definitely accrued interest will be there. But anyway, let me conclude for you, sir. Whenever you solve any debentures question, always write, keep in mind 4 things before you. If you just keep 4 things, you will never write wrong, sir. What is the first thing? Year ending, you please write down separately. Then, interest due dates, you please write down separately. Because based on these two only, we'll decide whether accrued interest is there or not. Similarly, which year is it? Is it calendar year or accounting year? So that anyway you will write. Then another thing is, you could observe brokerage. Hello, what is that? Brokerage. What is the brokerage? So here, when I say year ending, sir, it is along with the calendar year or financial year. So just to keep these 3 points in mind, definitely you will not commit mistake. Because there are some students who don't look at brokerage and write the entire answer, and suddenly at the end they see brokerage. So just write down brokerage at the beginning only, note down it, sir. Some students, they wrongly apply interest due dates. They take wrong interest due dates. Some students, they forget that it is calendar year and they go for financial year. All these are the mistakes which are regularly committed. But if you write these 4 aspects at the beginning of the question separately, at least in rough, you will never commit mistakes. Because when we know concept, we should never commit mistakes, sir. This is a question where we know concept. So ensure that you follow some basic aspects so that you will never commit any mistake. Shall we proceed? Okay. So first transaction is completed. Let me proceed to next one, sir. On August 1st, 2018, company again purchased 2,500 debentures of 102.5 on come interest. I think exactly same transaction. So we will record in the same way. To bank, interest we will record, cost also we will record. So next, I am proceeding, sir. On 1st October, company sold 2,000 debentures at the rate of 103 each. Sir, is it come interest or ex interest? I think printing mistake, right? Not given in the question. Huh? First of all, interest only not there. Whether come interest or ex interest, interest receipt and payment is common, I have said you. Now understand, what is the last interest due date? 30th September, on which date you are selling debentures? How could you collect interest, sir? Yesterday only you have received interest. Today when you are selling debentures, buyer, you please pay me interest. How it is possible? So thereby, sometimes question will confuse you, sir. You will think, where is come interest or ex interest? But please understand, yesterday only you have received the interest. Okay, right? So sale value is there, sir, 2,000 into 103. So you will record 2,000 into 103, 2,06,000. You have to compare with the cost. How many debentures you are selling? 2,000. So this will be the cost for 7,50,000. Of course, 7,500. You have to find for 2,500. You will find the cost, sir. Cost of acquisition. So 2,03,000. You could observe here. The two costs will divide by 7,500. Will multiply with 2 lakhs because we are selling 2,000 debentures. So we'll get the cost. The difference is profit. How much, sir? 2,167. So that we will write in our P&L because it is profit. I will write to P&L 2,167. Sir, interest receipt and payment is common. Don't forget to write that. I am not explaining that, though it is there. Interest receipt. Look at the interest due date and please record it. Okay, right. Next, let me move to the very good point which is committed as mistake usually. On 31st December 2018, company received how many shares, sir? 10,000 equity shares of 10 each in conversion of 20% of its holding. Hello? 10,000 equity shares of 10 each in conversion of what, sir? 20% of its holdings. Let me tell you one thing. So 20% of its holding means today how many debentures are there with us? 5,000 plus 2,500 minus 2,000. So that means 5,500. Out of 5,500, 20% conversion is happening. That means how many debentures? 1,100 debentures. We already know the cost for 7,500. Out of this 7,500 only this 1,100 is also there. Out of that 7,500 only this 1,100 is there. So simply once again these two divided by 7,500 into 1,100. Or else what you can do, reduce this 2,06,000 minus 2,167. In other words, you are having the cost of those 2,000 debentures, 2,03,833. That is the cost for 2,000 from the existing two values. If you reduce this cost, you will get the cost for 5,500 debentures. In that case, divided by 5,500 into 1,100. But it is not required, sir. Make it simple for you. So total, this is the cost for 7,500. Now you are having the cost for, you require the cost for 1,100. So divide by 7,500 into 1,100. The cost will be how much, sir? 1,12,108. How much, sir? 1,12,108. Now how much equity shares you are receiving, sir? 10,000 shares of 10 each. Now tell me profit or loss. Now tell me profit or loss. Usually what you say, sir, that is 1,12,108. We are receiving 1 lakh. So by P&L 12,108. Out of 100 students, 80 students used to write by P&L 12,108. But that is a blunder mistake on exchange barter. Who will have profit, sir? Nobody will have profit. So simply what we write, sir? In investment account, we will write by, what we are receiving? Equity shares. So we will write by equity shares because entry is equity shares to debentures. We are receiving equity, we are giving debentures. Equity shares account that are to debentures. So we will debit equity shares. Here we should write nominal value of the debentures only because to that extent debentures nominal value should be cancelled. To that extent debentures nominal value should be cancelled. Hence for 1,100, what is the nominal value? 1,10,000. So that we have to credit it. And what is the amount we write here? Cost only. Because now itself I have said no profit or loss. Entry will be written for what value, sir? Debentures account that are two equity shares, same amount, sir. 1,12,108. No profit or loss. Previously, what you used to write? You used to write two equity shares, 1 lakh, and maybe difference to the end. Sorry, reverse, sir. Reverse. Equity shares you are receiving. Equity shares to debentures. How much, sir? 1,12,108. So this is the point. So in our solution, we'll write by equity shares 1,12,108. For this 1,100 debentures, you have to settle the interest also immediately, sir. How many months completed? Please observe. What is the last interest due date? What is the last interest due date? 30th September. What is the date of conversion? 31st December. Okay, so 30th September is the last interest due date. So how many months are there? 3 months. For these 3 months, we should receive interest. So thereby 1,10,000 into 13.5% into 3 by 12. So that should be the interest. On that day only, we will show it as received by bank 3,730. Is that clear, everybody, sir? In that way, we will record. Now, once these transactions are completed, rest is only closing, sir. They have given market value. What is that? Market value. So, how many debentures are existing? 4,400. 4,400 into the market value they have given 106. We'll get the market value. If we find the balancing figure, usually what you get is cost, sir. What you get is cost. Now, cost you will compare with market value and you have to value at whichever is lower because all the investments given in the question are current or long term. Long term means one sale also should not happen. Because what is long term investment, sir? What is long term investment, sir? Which are not current investments. So current investments means which are purchased with an intention to hold for not more than 1 year and are readily realizable. Because you are selling within 1 year, so definitely these are current investments. Is that clear, sir? And any examination, take it as granted, never they will give long-term investments as a question, sir. Why, sir? If long-term investment is there, they should give you opening balance purchase, that's all, no more question. They will not be sale, no. So they cannot give such a simple question. So usually they give only current default, you can assume as current investments. Sir, with this, we are closing debentures. Here, one more point in the same question, they may ask you to prepare equity shares account also, sir. Very simple. In debentures account, what you have written? Buy equity shares. In equity shares, you will write 2 equity shares. Sorry, 2 debentures. So then, at the year end, they have given one value, 9 rupees. How many equity shares? 10,000. Cost for you is 1,12,000. Market value is 9 rupee. So thereby, 10,000 into 9, closing balance should be 90 because whichever is lower. So the difference should be transferred to P and. In that way, you have to prepare equity shares account. Sir, have you all understood, sir? This is with respect to debentures. Take it as granted, sir. Now, if you are able to solve CRD 6, CRD 5, even more simple. A Lilliput question before CRD 6. Because similar concepts only will be there, sir, without conversion. Maybe with brokerage. Here, brokerage will be there. In the question I have taken, brokerage is not there. But if you just know that computation, I can say, sir, whatever chart I have given covers all the points with respect to debentures. Shall I proceed? Now, equity shares. Let me take one chart for equity shares also, sir. Here also I have covered everything, sir. Just let me start. Now, all the students who are listening from YouTube, hope you are also understanding. Let us touch them also. Okay. Because they are also concentrating. Okay. Now, any doubts you can ask? Okay, right. Let me continue then. So shares, everybody please look carefully. With respect to shares, what are the transactions possible? What transactions are possible, sir? Either you will purchase, or you will sell, or you might receive bonus, or you might receive rights, or you might receive dividend. Anything else, huh? Don't tell me opening or closing. Hello. That will anyway be recorded, sir. That is not a transaction. So transactions are either purchase or sale or bonus shares or right shares or dividend. So let us discuss all these things. Sir, once we know purchase and sale for debentures, now I am using the word repeatedly, but I can say really it's Lilliput only. Because their interest due dates will be there. You have to be careful. Cum interest, ex interest. So that concept will be there. Here, interest is an obligation, sir. Dividend is obligation, no. So you will not be having cum dividend and ex dividend. So generally, so as a result, questions becomes very, very simple. Now, purchase, how do you record? Very simple. Number of shares into share price, add brokerage, over. Sale, how do you record? Number of shares into share price less brokerage. Because you want only net sale value. Once again, same treatment, sir. Compare with the cost. Cost is computed based on usually weighted average. So in that basis, you find the difference and transfer to profit or loss. Clear? And now comes the important aspects. One is bonus share. How do you record bonus shares? For bonus shares, any entry? You are receiving bonus shares. Sir, our golden principles, if we receive anything, we have to debit it. So thereby debit bonus shares, then what you will credit? If you debit bonus shares, what you will credit? You cannot credit anything. Even if you want to credit something, let us say bonus shares to something account, at what value you will write, sir? What value? Are you giving anything? No, it becomes 0. So thereby usually entry is nothing. No entry you will record. But because number of shares are increasing and our total number of shares should increase, what we will do? Just in number of shares column, we record the bonus shares received. That's all. Is that clear, sir? I don't think big discussion is required. Simple only. Next, rights shares. Sir, please understand, actually we learn about rights, not right shares. Hello, what is that? We talk about rights, not right shares. So both are different, rights and right shares. Rights and right share different, Tell me, both are different or same? Sir, when you are an existing shareholder, every company gives a right to you to subscribe certain number of shares at a concessional price. This is a right. If you exercise that right, what you get is right share. Sir, please understand. Every company gives a right to subscribe certain number of shares at a concessional price. That is a right given to you. If you exercise that right, what you get is right shares. So now let me write down rights we can divide into two types, rights exercised and rights sold. Sir, whenever rights were there, either you can exercise it or you can sell it. So if you sell, what treatment will happen? Tell me, for getting this right, have you paid anything to the company? For just being the existing shareholder only, you have received that right. You have not paid anything for that. So usually, entire sale value on rights to be credited to P&L. It's an income because cost of right is 0. Hello. What is that? Cost of right is 0. Sometimes, rarely, in the question, they may clearly mention shares are purchased on come right basis. What is that? Shares are purchased on come right basis. That means for right also you have paid something. If you have paid something for right, then from sale value you have to reduce that cost. Difference only has to be transferred to P&L. Usually they don't say that, sir. In such a case, right for you is 0. Cost of right for you is 0. Then entire sale value is income. So you will transfer to P&L. Sir, is that clear, sir? So thereby entire sale value has to be transferred to P&L. But because I'm talking about that come right basis, let me clear you one point, sir. Usually there is a principle that if you have purchased shares on come right basis and later on, immediately after the exercise of right, there is a decline in the share value, then that difference will be transferred to P&L. Like that, one miscellaneous point will be there, sir. Rarely tested in the exam, but there is one comprehensive question like that where you get shares are given on come right basis. Let me tell you one thing. Just if the shares are given on come right basis, you cannot do like that, sir. They should also clearly prove that immediately after exercise market price have reduced. In the question given in ICAI material, they will not talk anything about the market price immediately after exercise. As a result, you will not give that effect. You will account in the normal way. But if you assume that, take an assumption that, no, sir, market value after exercise also has reduced, then you can transfer it to P&L. Maybe you will have one comprehensive question, sir. I'll just show you this. I think the last question, I think. This question only. Yeah? Yes, here you will be having. They will be giving on come right basis, but nothing you will be doing extra in this question. The same answer will be there, what you have done in the other questions. Reason is, you don't have any information with respect to reduction in market price immediately after the exercise, because they will give rights were exercised on 25th August. What is the market price after that? Do anybody know? Have they given? They have given once again on 112 or some. Nobody knows the market price. Hence, we cannot apply that point, sir. Usually, please remember this way only. Entire amount from sale of rights to be credited to P&L. It's a income. Rarely, if it is come right and that too reduction is there immediately after exercise, then only it has to be transferred. Then only the difference only has to be transferred to P&L. Otherwise, entire amount has to be transferred to P&L. In such a case, it should be adjusted against cost, sir, if all the two conditions are satisfied. But anyway, leave it, sir. It's a miscellaneous point, because if anybody see comprehensive question, you may get that doubt. That is why I am clearing it. Reason for we not considering is market price related information will not be given in the question. Only when we know that point, we can answer. But leave it, sir. Not at all required for examination. Rarely they will test it. Leave it. Now, let me proceed, sir. So we are talking with respect to shares. Now, entire proceeds from sale of rights will be credited to what, sir? P&L. Entries will be bank to sale of rights to P&L. That means in investment account, will we write anything for sale of rights? In investment account, will we write anything for sale of rights? No. Simply the entries will be bank to sale of rights to P&L. Is that clear, everybody? Okay, right. Now, what about the rights exercised, sir? Suppose you have exercised some rights. Now, what about that? What you are telling? You are exercising right. Exercising means what, sir? Simply you will write in the agreement, I am exercising. No, you have to pay some amount. So whatever you pay is nothing but the concessional price you are paying. Entry will be common. Investment account at to bank. You are getting some shares but paying at a concessional price. Simply the entry will be investment account at to bank. That's all over. Sir, if rights shares is if rights is exercised, you will get rights shares. For that, what is the cost? Investment account at to bank. If rights are sold, simply you will write bank to sale of rights to P&L as a working note, not in the investment account, because nothing should be written in investment account. Simply we will write as a note that entire sale proceeds from rights to be transferred to P&L. Sir, clear? Let me move to the last one, dividend. Hello, what is that? The most important one, sir. Everybody, what is that, sir? Dividend. Dividend can be divided into two types. What are the two types? One is pre-acquisition. The other one is, so what is pre-acquisition and what is post-acquisition? Generally, you might heard like this, sir. You might have heard like this. Sir, earned and accrued in the pre-acquisition, but received in the post is called pre-acquisition dividend. Earned, received, accrued, everything in the post-acquisition is what, sir? Post-acquisition dividend. In other words, sir, you have invested, after that you have earned, then only you have received. Everything is post, that is post-acquisition. Sir, earning is before acquisition, sir, but receipt is after acquisition. Have you really earned it? No. So that's not your income, sir. So that's why that's a pre-acquisition. Usually seller might have collected for money from you for that. Now you will recover that. So thereby it's not an income for you. It's a recovery of cost. So entry for pre-acquisition dividend will be bank account to investment because it's a recovery of cost. Entry for post-acquisition dividend will be simply the normal entry for dividend, bank to dividend, dividend to P&L. Discussion clear? Pre-acquisition dividend means bank to investment, post-acquisition means bank to dividend, dividend to P&L. When it was earned, when it was received. That is what important, sir. Earned and received after acquisition means post. Earned before but received after means pre. Because it's not a real income for you. After you invest, if you earn, that is real income. Have you understood? Though this information is known, many students commit mistake only with respect to dividend. I am telling you, sir, in shares, is there any possibility of committing mistakes? Two mistakes are possible. One, ignoring the brokerage. Hello, what is that? Few times you will not consider that brokerage. That is one area of mistake possible. Another area is usually dividend. With respect to that pre-acquisition, you will confuse what is pre, what is post. You will write in P&L dividend somewhere in different columns. You will confuse like anything. So just that clarity only now I am going to give you, sir, by taking a note. Just remember this table, sir. With this any question dividend you can crack like anything, sir. Whatever the question may be, you will be easily able to write. What is that? Let me show you. Sir, dividends are two types. I am giving another classification. Dividends are two types. One is final dividend, the other one is interim dividend. What is final dividend, sir? Once the books of accounts are finalized, board of directors will see how much profits are there. Now they will look after the obligations and they will propose the dividend. Later on, the same dividend will be approved and accepted by the shareholders, which we call as declaration. Which we call as what? Declaration. In other words, because the dividend is paid after finalization, this is called final dividend. Now interim dividend means, suppose suddenly in any year you have got huge profits. Suppose you have got a big export order. Suddenly 100 crores export order is received. Now you feel very happy. Bumper profits are there. Now you want to communicate everybody in the market that we are performing very well. Come and invest in our company. Like that you want to communicate. How do you communicate everybody in the market, sir? The best way to communicate to the market is interim dividend. Because generally you expect dividend once the year is completed, maybe at the AGM. Suddenly if you receive any huge amount, you feel very happy. You cannot show with yourself. You will just start telling everybody, suddenly received huge amount, I am very happy. Now that dividend is usually interim, sir, because dividend declared between two AGMs is called as interim dividend. Now what I want to say is, final dividend for any year will be declared and paid in the next year. Something I have said. What I have said? Final dividend for any year will be declared and paid in the next year. Whereas interim dividend for any year declared and paid in the same year. Because we want to declare in now only, sir. If we declare in next year, what we will communicate to the shareholders? Next year come and invest. Hello. We want them to invest now itself. So immediately we will give a dividend without waiting for any AGM. Sir, clear a final and interim? Now. Look here carefully. Sir, usually you may have these types of shares in the question. Either you may be having some opening balance of shares, or you may be having some shares purchased during the year, or you may be having some bonus, or you may be having some rights. Now let us see, if final dividend is given, which shares are eligible, which are not eligible. If interim dividend is given, which shares are eligible, which are not eligible. Sir, if final dividend is given, bonus and rights eligible. Because dividend is given during the year. If dividend is given during the year, this dividend is related to which year? Last year. Because I am telling final dividend. Dividend for the last year only will get declared and paid in the current year. So in the current year, if dividend is paid, this is relating to the last year. Bonus shares and rights shares created during the current year. If they are created in current year, how you can pay last year dividend? So they are not eligible. Whereas if you have purchased any shares during this year, they are eligible or not eligible? Eligible or not eligible? Eligible. Why? I have given tick mark. Hello. Sir, why it is eligible, sir? Now we have purchased during this year. No, I am paying last year dividend. Why it is eligible? Please understand, you have purchased shares in this year. From whom you have purchased? Company, from secondary market only. That means, though you may not have it, somebody is having it in the last year. It is enough that shares is there in the last year. That shares need not be with you. If shares are existing in the last year, it is sufficient. That need not be with you. So thereby, if you have purchased shares during the year, definitely these shares might be there in the last year also. So these shares also eligible. Opening balance will anyway be eligible. Sir, clear? So out of these four types, these two only eligible. Now there comes a question, what is pre-acquisition dividend and what is post? Now I can say, sir, opening balance means these shares are existing previously, from previous period only. Now please understand, if it is existing from previous period, if it is existing from previous period, that means after investing only you are earning, and receipt is also after investment, which makes it which type of dividend? Post acquisition dividend. Because these shares are there prior only. After your investment only, last year dividend is earned, and after your investment only, receipt is also there, which makes it a post acquisition. That is a real income for you to be transferred to P&L. That means if we maintain a dividend column, we will write by bank in the dividend column. Suppose if it is shares purchased during this year, now dividend is related to which year? Last year. Have you held in the last year? No. Have you earned it in the last year? No. Earned in the last year, but received after acquisition. Earned before acquisition, received after. So it is which dividend? Pre. So this has to be transferred to investment account. That means in by bank we will write in the amount column. By bank we will write in the amount column. Have you understood, sir? Now, if we come to interim dividend, that is for the dividend during this year. For this year only we are paying the dividend. All are eligible because bonus and rights created during current year, and we are talking about the dividend of current year. All shares will be eligible, and I can say because dividend is for current year, we assume that if after investment only these profits are earned. As a result, entire dividend will be post. Sir, is that clear? This is conceptual discussion, sir. In examination, always you cannot remember all these things. I'll just tell you one simple way of answering. Only for shares purchased during the year. Hello, something I have said. What I have said? Only for shares purchased during the year, pre-acquisition dividend will be there. For all other things, you will have only post. For shares purchased during the year, and that too if it is final dividend, pre-acquisition will be there. For all other shares, what will be there, sir? Post acquisition dividend. Hope you have understood. Now let me show a question, sir. You will have full clarity. Sundar question. Let us proceed. Hello. Company name is Sundar. Hello. Let us move to the question, sir. Question number 8. Repeatedly asked, sir. Similar model. I don't say same question. Similar model. Repeatedly asked in the examination. So let you all understood till now. I know I cannot discuss comprehensively, but this is a revision class. But I am covering almost all the aspects to the extent required. Okay, right. Let me deal with this question, sir. Once again, solutions also our friend. Okay, now let me start. On 1st April 2011, Sundar had 25,000 equity shares of X Limited at a book value of 15 per share. No big discussion, sir. Straight away, 25,000 into 15, 3,75,000 over. Next, on 20th June, he purchased another 5,000 shares of the company at rupees 16 per share. Debentures means we have to fill cum interest, ex interest. No big discussion. 5,000 into 16, 80,000 over. 2 bank, 5,000 and 80,000. Next, what was happened, sir? The directors of X Limited announced a bonus and rights. No dividend was payable on these issues. Okay, they might be declaring some final dividend. Anyway, for final dividend, those two are not eligible. They are only telling in the question. Now, bonus basis. What is the bonus basis? 1:6. Till now, how many shares are there? 25 and 5, 30,000. What is the ratio? 1:6. How many bonus shares you will receive? 5,000. Simply you will record in the number of shares column 5,000. Nothing in the amount column. Sir, clear? Next, rights basis. 3:7. That means you will receive this many rights, sir. You will not receive right shares. You will receive rights. Later on, you will exercise or not is secondary. So, total how many shares are there? 25, 5, already bonus also completed. So, 35. Till now, how many? 35. What is the ratio? 3:7. 35,000 into 3/7, 15,000. How many? 15,000 is the rights you receive. In that, shareholders can transfer their rights in full or part. Accordingly, Sundar sold 1/3 of his entitlement. Sold 1/3, that means exercised 2/3. So that means out of 15,000, 10,000 rights will be exercised. 5,000 rights will be sold. Sale value of right is 2 per share. So thereby 5,000 into 2, 10,000 has to be transferred to P&L. That will not be recorded anywhere in the investment account. We'll simply write in notes. Now relating to 10,000 shares, we are going to exercise. What is the exercise price? 15. So thereby 2 bank, 10,000, 10,000 into 15, 1,50,000. Simple way of recording. Next, dividends for the year ended 31st March 21 at the rate of 20% were declared by X Limited and received by Sundar on 31st October 2021. Now tell me one thing. This dividend related to which year, sir? Current year or last year? You could observe current year is 1/4/21. This is last year, 31st March 21. That means which dividend? Final dividend or interim dividend? Final dividend. So tell me, out of these 4, 25, 5, 5,000, 10,000, which shares are eligible? Opening and shares purchased during the year. These two are not eligible. So out of these two, what is pre and what is post? We did not look more. Now 5,000 will be the pre, 25,000 will be the post. I have already said you, only for shares purchased during the year, you will be having pre. For others, you will be having post. But logically also I have explained, sir. First logic, then only memory tip. Okay, right. Now, what is the dividend, sir? 20%. Face value is 10. That means dividend per share, 2 rupees. So thereby, for this 25,000, what dividend we receive is post. So 25,000 into 2, 50,000 in which column? Dividend column. For this 5,000 shares, it is pre. So 5,000 into 2, how much? 10,000. Bank account attached to investment account. So thereby, we will write in amount. That's all over. Sir, have you understood? Many students confuse a lot with respect to this 50 and 10. Many different questions, different mistakes. But just remember this chart. It will be so simple, sir. Only for one point, you will credit to amount column. In all other places, you will credit to dividend column. What is that one place? Shares purchased during the year. In all other places, simply transfer to dividend column. You need not think big, sir. For examination, remembering is simple. Understanding logic only takes some time. Okay, right. Anyway, completed. Next. On 15th November, Sundar sold 25,000 equity shares at a premium of 5. So 25,000 into 5, sorry, premium of 5, sir. That means 15. 25,000 into 15, 3,75,000. We'll compare with the cost. Now please remember, what is the cost for you for this 25,000? These two minus this 10,000. Don't forget to reduce this 10,000. This is one of the biggest mistake committed, sir. Out of 100, 30 people may commit mistake in writing 50,000 and 10,000. 90 students will commit mistake in reducing this 10,000 while they compute the cost. While they compute the cost of this 25,000, they'll add these two, but they forget to reduce 10,000 because you are reducing the investment value, no? So cost has to be reduced. Let me show you the cost, sir. So cost of those shares, okay. So cost of those shares, how many shares you are selling? 25,000. The cost of these shares will be 3,75,000 plus 80, sorry, that 1,50,000 also, right shares only, no? So that also to be considered. So this one also, but what I say is that 10,000 has to be reduced. So these three together minus that 10,000 divided by number of shares 45,000, because what is left is 45 into 25 will give you the cost. Compare with the sale value, you will get the profit or loss. In that way, you will write by P&L. If there is loss, by P&L. Profit means to P&L. Profit is there to P&L. Closing balance, how many shares are there? 20,000. Now, cost we can already find, sir, just in this way. You have found for 25,000, now find for 20,000. Cost you can find, then compare with the market value, which they have given in the question. Have they given any market value? Nothing. So if not given, directly you will write it, that value only, sir. Cost only will be written. In that way, you will close, sir. Sometimes they may ask you to prepare P&L extract. What is that? Simply whatever items you have received till now, which you transfer to P&L has to be recorded. Tell me, opening balance, anything related to P&L? No. Purchase during the year, anything related to P&L? No. Bonus, anything linked to P&L? No. Rights, anything linked to P&L? Yes. Sale of rights, 10,000. Bank account at to sale of rights in P&L, sale of rights to P&L. So in P&L we'll write by sale of rights. Then similarly, dividend, anything related to P&L? Yes. Pre-acquisition to investment, post-acquisition to P&L. Of course, we'll write in dividend column also that we transfer it to P&L. By dividend 50. Once again, in the last scenario at the time of sale, we have got some profit. That also will transfer to P&L by profit on sale of shares. That's all over, sir. Sir, have you all understood? Once again, I guarantee one thing. I am teaching you only 2 problems, but I am covering conceptually almost all the points, sir. When you solve the questions, you will get it. So these points are only there. So with this, we are closing investment accounts also. Let me